Before Bitcoin, before gold, before banks, before money itself, there was land. The first currency. The first collateral. The first store of value. And unlike every financial innovation that came after it, land had one property no technology could ever replicate: absolute, physical scarcity. Bitcoin launched in 2009 promising revolutionary digital scarcity, a fixed supply of 21 million coins that could never be inflated. It reached a market cap of $1.8 trillion by December 2024. Impressive. Except land did this 10,000 years ago. Earth's terrestrial surface is exactly 148.9 million square kilometers. That number hasn't changed since the continents finished forming. It never will. Every empire, every fortune, every war in human history has ultimately been about controlling this finite resource. Here's what they don't tell you. Bitcoin isn't revolutionary, it's derivative. It's the latest attempt to recreate digitally what land has always provided physically. Scarcity. Proof of ownership. Value that survives governments. The properties that made land humanity's original reserve asset. And when you look at where the world's wealthiest are actually putting their money in 2024, the pattern becomes undeniable. Bill Gates owns 275,000 acres of American farmland. Jeff Bezos owns 420,000 acres in Texas. Mark Benioff quietly bought hundreds of acres in Hawaii. Tech billionaires who made their fortunes in code are rushing back to dirt. The global residential real estate market, just houses and apartments, stands at $287 trillion as of 2024. That's 91 times larger than the entire cryptocurrency market at $3.15 trillion. Add in commercial property and agricultural land, and total real estate hits $393 trillion. It's still the world's largest asset class. By far. After 15 years of Bitcoin, after decades of digital finance, after the entire technological revolution, land still rules. This video uncovers the oldest story in economics. How land became humanity's first Bitcoin. Why every financial technology since has been trying to replicate it. And why, no matter how digital our world becomes, those who own the ground beneath your feet will always rule those who don't. If this kind of deep analysis is valuable to you, hit the like button and subscribe to the channel. It helps this content reach more people who want to understand what's really happening beneath the surface. Now, let's dig into the original Bitcoin. Land was the first asset in human history with the properties crypto evangelists now worship in Bitcoin. Provably scarce, impossible to counterfeit, immutably recorded ownership, and value that transcends governments. Every subsequent financial innovation, from gold coins to paper money to blockchain, has been an attempt to recreate these properties in portable form. Some came closer than others. None succeeded completely. Here's what we're going to cover. First, the 6 properties that made land the perfect economic asset and why they still matter. Second, the historical evidence showing land was humanity's first and only universal reserve asset for millennia. Third, how gold, fiat currency, and Bitcoin each tried to replicate land, and where each fell short. Fourth, the direct parallels between land's properties and Bitcoin's design. And finally, why in 2024, as we enter what some call the digital age, the world's wealthiest are quietly moving their fortunes back into the oldest asset of all, dirt. The pattern has been hiding in plain sight for 10,000 years. Let's expose it. So what makes land the ultimate economic asset? Why couldn't any subsequent financial technology truly replace it? Let's break down the 6 properties that made land the original Bitcoin and why they still matter. Land is the only asset in human history that cannot be created. Gold can be mined. Currency can be printed. Stocks can be issued. Cryptocurrencies can be forked. But land? Fixed supply. Earth's surface area is 148.9 million square kilometers of land out of a total 510 million square kilometers. That's it. That number was set when the continents stopped drifting into their current configuration. No technology, no matter how advanced, can manufacture more Earth. Bitcoin's 21 million coin limit is impressive, but it's mimicking a scarcity that land established billions of years before humans existed. Every economic asset needs demand to have value. Gold's demand is partly aesthetic, partly industrial, but mostly speculative. Bitcoin's demand is purely monetary and speculative. But land? Land produces food, provides shelter, enables commerce, and yields resources. Humans need it to survive. This isn't abstract value, it's biological necessity. You can't eat gold. You can't live inside a Bitcoin. But land generates tangible, continuous utility. Agricultural land produces crops. Residential land provides housing. Commercial land facilitates business. Industrial land enables production. This dual nature, scarce and useful, is what made land impossible to replace. Now add location to the equation. Not all land is equal. An acre in Manhattan is worth exponentially more than an acre in rural Wyoming. An acre with water rights in California trades at a massive premium over dry land. This non-fungibility, the fact that each parcel is unique, actually enhanced land's value rather than diminishing it. Bitcoin is perfectly fungible, every coin is identical. But land's location-based differentiation created natural price discovery and specialization. The best farmland went to agriculture, coastal land to ports and trade, mineral-rich land to extraction. This heterogeneity made land more valuable, not less. Here's where land truly separated itself from every subsequent store of value. Ownership could be physically defended and socially recognized. For thousands of years before formal legal systems, land ownership was established through occupation and defense. If you worked the land, built on it, and could hold it against challengers, it was yours. This is the original proof of stake, literal, physical stake in the ground. Later, when civilizations developed writing, land ownership became the first thing worth recording. The Sumerians kept land registries in 3000 BC. The Doomsday Book in 1086 catalogued 13,418 settlements across England. Land ownership was so important it became the foundation of legal systems themselves. Bitcoin's blockchain merely digitized what land registries have done for 5,000 years. Unlike gold that can be melted, currencies that can be burned, or digital assets that can be hacked, land is fundamentally indestructible. Buildings can be demolished. Crops can fail. But the land remains. You can't destroy dirt. This permanence gave land a time horizon no other asset could match. Families held the same land for generations. Empires rose and fell, but the land endured. This durability made land the ultimate intergenerational wealth transfer mechanism, a property Bitcoin attempts to replicate through its immutable blockchain. The final property that made land perfect. Its value increases with surrounding development. A plot in an empty wilderness has limited value. But as roads are built, as neighbors arrive, as infrastructure develops, that same plot becomes exponentially more valuable, without any improvement to the land itself. This is a network effect. The more people who use and develop land around you, the more your land is worth. Bitcoin's value proposition relies on the same principle. As more people adopt the network, each Bitcoin becomes more valuable. But land had this figured out 10,000 years ago. These 6 properties, absolute scarcity, intrinsic utility, location premium, proof of ownership, indestructibility, and network effects, made land the only perfect economic asset humanity has ever known. Everything since has been a compromise. Let's go back. Way back. Before central banks, before monetary policy, before anyone conceived of reserve assets, land was already serving that exact function. In ancient Egypt, wealth wasn't measured in gold or silver. It was measured in aruras, units of agricultural land. A single arura was roughly 2,750 square meters. The pharaohs' power came from controlling the Nile's floodplains, the most productive agricultural land in the ancient world. Temple accounts from 2500 BC don't list gold reserves, they list land holdings. Because land produced grain, grain fed armies, and armies conquered more land. This was the first reserve system, land backing power backing more land. Rome perfected the model. By the 2nd century AD, just 1% of Rome's population controlled over 50% of all agricultural land in Italy through the latifundia system, massive estates worked by slaves and tenant farmers. These weren't just farms. They were economic empires. The wealthy Roman families, the Scipios, the Milii, didn't diversify into shipping or trade as their primary wealth strategy. They accumulated land. More land meant more grain production, more rents, more political power. When you read about Rome's elite, you're reading about land barons. The richest Romans owned estates spanning hundreds of thousands of acres across the empire. Julius Caesar used land grants to pay his armies. Augustus distributed land to 120,000 veterans. Land was money. Land was power. Land was everything. This pattern repeated across every civilization. Medieval Europe's entire social structure was built on land ownership. The feudal system wasn't primarily about military service, it was about land control. Kings owned all land theoretically. They granted portions to nobles in exchange for loyalty. Nobles subdivided to knights. Knights extracted rents from peasants. At every level, wealth and status flowed directly from land. The Doomsday Book of 1086 wasn't just a survey. It was the English crown establishing exactly who owned what land and therefore who owed what taxes. Over 90% of the English population owned zero land. They worked land owned by others. The 10% who held land titles controlled society completely. Here's a concrete example of land as the ultimate reserve asset: the Percy family of northern England. In 1377, Henry Percy became the first Earl of Northumberland. The family accumulated vast landholdings across northern England, over 200,000 acres at their peak. For 400 years, the Percys were among England's most powerful families, not because of trade or innovation, but because they owned land. Their wealth generated automatically through agricultural rents. Their political power came from controlling the land where thousands lived. When Henry Percy rebelled against King Henry IV in 1403, he could raise an army of 10,000 men, not through payment, but through feudal land obligations. The men fought because Percy controlled the land they worked. The Percy fortune survived wars, plagues, political upheavals, and economic crises spanning centuries. But because you can't print land, you can't inflate it, you can't debase it. Currencies came and went. The English pound was redenominated multiple times. But the Percy estates remained, generating income year after year. Their wealth compounded not through financial speculation but through the simple, inexorable mathematics of rent collection on irreplaceable land. This is what made land the original Bitcoin. It was the only asset that could preserve and transmit wealth across centuries without requiring trust in any institution. The land was the institution. Every financial innovation since land has been an attempt to solve one simple problem. How do you get land's properties, scarcity, durability, value storage, in portable form? 3 technologies came closest. Each succeeded in some ways. Each failed in others. Gold was humanity's first serious attempt to create portable land. Mined from the earth like land, scarce like land, durable like land. Gold became the monetary standard for 5,000 years. It worked because it mimicked land's key properties. You couldn't create more of it easily, it didn't decay, and it was universally valued. Ancient kingdoms measured wealth in gold because transporting land is impossible, but gold could move. The gold standard, formalized in the 1800s, was essentially an attempt to back currency with something as reliably scarce as land itself. But gold had fatal flaws that land didn't. Gold generates no income. Agricultural land produces crops annually. Residential land generates rent. Commercial land enables business. Gold just sits there to... It has some industrial uses. About 10% of gold demand comes from electronics and dentistry, but mostly it's a speculative asset. Its value exists because people agree it has value, not because it does anything useful. More importantly, gold is still being mined. Total gold supply increases by about 2% per year. The scarcity isn't absolute, it's just slow inflation. Between 1980 and 2024, Total above-ground gold supply increased from roughly 90,000 metric tons to over 200,000 tons. Land supply? Still 148.9 million square kilometers. Unchanged. Gold's greatest weakness: it requires physical security. Unlike land, which is hard to steal and impossible to hide, gold is portable and concealable. This made it vulnerable. Fort Knox wasn't built to protect land titles. It was built because gold can be taken. Land's immobility is actually a feature, not a bug. You can't load land onto ships and sail away. This permanence is what made land the superior long-term reserve asset despite gold's portability advantage. Then came the 1971 revolution. President Nixon closed the gold window, ending the Bretton Woods system and severing the dollar's tie to gold. This created pure fiat currency, money backed by nothing except government decree. Fiat solved gold's portability problem completely. Currency could be printed, transferred electronically, scaled infinitely. But in solving that problem, fiat destroyed the property that made land and gold valuable in the first place: scarcity. Since 1971, the US dollar money supply has increased by over 2,500%. What cost $1 in 1971 costs $8 today. The Federal Reserve's balance sheet expanded from $400 billion in 2007 to $8.9 trillion by 2022. That's a 2,125% increase in 15 years. This is the opposite of land. You can't print more earth. You can't quantitatively ease additional acres into existence. Every fiat currency in history has eventually inflated to worthlessness because scarcity, true scarcity, is impossible when supply is controlled by governments with incentives to print. Land supply is controlled by physics. Fiat supply is controlled by politicians. That's why land still holds value after 10,000 years while the average lifespan of a fiat currency is 27 years. Enter Bitcoin in 2009. Satoshi Nakamoto explicitly designed it to fix fiat's fatal flaw: unlimited supply. Bitcoin's code limits total supply to 21 million coins. This is programmatic scarcity, scarcity enforced by mathematics and distributed consensus, not by physics. In this way, Bitcoin is the closest humanity has come to replicating land digitally. Like land, Bitcoin's scarcity is absolute. Like land ownership recorded in the Doomsday Book, Bitcoin ownership is recorded on an immutable blockchain. Like land's network effects, Bitcoin's value increases as more people adopt it. But Bitcoin still has the same fundamental weakness gold had: no intrinsic utility. You can't live in Bitcoin. You can't grow food on it. You can't build factories on it. Bitcoin generates no income unless you lend it out or sell it for more than you paid. Land produces value continuously just by existing. A farm generates crops whether you trade it or not. An apartment building generates rent. Commercial land enables business operations. Bitcoin is pure speculation on scarcity and adoption. Its utility is entirely monetary. This makes it powerful, but incomplete. The crypto market hit $3.9 trillion at its peak in December 2024 before settling to $3.15 trillion. That's impressive growth. But compare it to real estate: $393 trillion globally when you include residential, commercial, and agricultural land. Real estate is 125 times larger than crypto. After 15 years of Bitcoin, after the entire blockchain revolution, land still dwarfs every digital alternative. The pattern is clear. Gold tried to replicate land scarcity but failed to replicate its utility. Fiat tried to replicate land's utility as a medium of exchange but destroyed its scarcity. Bitcoin replicated land's scarcity perfectly but couldn't replicate its utility. Every innovation has been a trade-off. Land remains the only asset with both absolute scarcity and intrinsic utility. That's why it's still the final boss. Let's put the parallels side by side, starting with the property that matters most: scarcity. Land scarcity is set by geology. Earth's terrestrial surface is 148.9 million square kilometers. That number has been fixed for hundreds of millions of years. Short of terraforming Mars or building floating cities, Humanity cannot create more land. Every human who has ever lived has competed for their portion of this fixed supply. This is scarcity at the planetary level. Bitcoin scarcity is set by code. The Bitcoin protocol limits total supply to 21 million coins, with new supply released on a predictable schedule that halves every 4 years. As of December 2024, approximately 19.5 million Bitcoin have been mined. Only 1.5 million remain to be issued over the next 116 years. Once all 21 million are mined, no more can be created. This is programmatic scarcity, absolute, mathematical, immutable. Compare this to gold. Gold supply has increased from 90,000 metric tons in 1980 to over 200,000 metric tons today. That's 122% growth. Yes, gold is scarce relative to other metals, but it's not absolutely scarce. New deposits are still being discovered. Mining technology keeps improving. The supply keeps growing. Bitcoin fixed this flaw. Its supply curve is set in stone. Like land, it cannot be inflated. Now compare to fiat currency. The US dollar money supply in 1971 was $776 billion. By 2024, M2 money supply exceeded $21 trillion. That's a 2,606% increase. The Federal Reserve expanded its balance sheet from $870 billion in 2008 to $8.9 trillion by 2022, a 923% increase in just 14 years. This is the opposite of scarcity. This is controlled inflation, which is just a polite term for debasement. Land doesn't debase. Bitcoin doesn't debase. Fiat debases constantly. The scarcity parallel is perfect. Land supply is fixed by physics. Bitcoin supply is fixed by mathematics. Both achieve absolute scarcity through mechanisms that cannot be overridden by human decision-making. This is why both have functioned as stores of value. Scarcity only works if it's inviolable. Both land and Bitcoin solved the same problem. How do you prove ownership without relying on a trusted third party? Land ownership was humanity's first blockchain. In ancient Mesopotamia, around 3000 BC, clay tablets recorded land transactions and ownership. These weren't just receipts, they were immutable records kept in temples. Altering them would require physical destruction and would be noticed immediately. The record existed in a single, authoritative location that everyone recognized. As civilizations grew, land registries became more sophisticated. The Domesday Book in 1086 was essentially England's first comprehensive property database. It recorded 13,418 settlements, who owned them, their value, and their obligations to the crown. This wasn't optional record-keeping, it was the authoritative source of property rights. If you weren't in the Domesday Book, you didn't own land. The book itself became the proof. Modern land registries operate on the same principle. Property titles are recorded by governments in official databases. These records are theoretically immutable. Changing them requires legal proceedings, witnesses, and documentation. The system works because everyone agrees the registry is authoritative. But there's a weakness. The registry is controlled by a central authority. Corrupt officials can alter records. Governments can confiscate land. The system requires trusting institutions. Bitcoin solved this exact problem using cryptography instead of clay tablets. The blockchain is a distributed ledger that records every Bitcoin transaction since the Genesis block in 2009. Instead of one authoritative copy held by a temple or government, thousands of copies exist simultaneously across the network. Every transaction is cryptographically signed by the owner's private key, mathematical proof that only they could have authorized it. Altering any record would require controlling 51% of the network's computing power, which becomes exponentially harder as the network grows. The proof isn't stored in Fort Knox or a government database. It's stored everywhere and nowhere simultaneously. This is revolutionary, but it's also exactly what land registries have done for 5,000 years, just without the central authority. Both systems answer the same question: how do you prove this asset is mine? Land did it through physical occupation plus social recognition plus written records. Bitcoin does it through cryptographic signatures plus distributed consensus. The goal is identical. The implementation is different. Both land and Bitcoin share a powerful property. Their value increases as more people use them. Land's network effect is obvious once you see it. A plot of land in the middle of nowhere has minimal value. But as people move nearby, as roads are built, as businesses open, as infrastructure develops, that same plot becomes exponentially more valuable, without any change to the land itself. Manhattan real estate wasn't valuable in 1626 when the Dutch bought it from the Lenape for 60 guilders worth of goods. It became valuable as millions of people, businesses, and institutions concentrated there over centuries. The land didn't change. The network around it did. Agricultural land exhibits this too. Farmland near population centers is worth more than equivalent farmland in remote areas, even if soil quality is identical. Because proximity to markets, labor, and infrastructure matters. A farm 20 miles from a city can sell produce fresh. A farm 500 miles away needs expensive transportation and refrigeration. The land's utility depends on the surrounding network of development. Bitcoin's network effect works identically, just digitally. When Bitcoin launched in 2009, one Bitcoin was worth essentially nothing. In October 2009, New Liberty Standard Exchange rate was $1 equals 1,309 Bitcoin, meaning each Bitcoin was worth $0.00076. By 2010, someone paid 10,000 Bitcoin for 2 pizzas, valuing each coin at $0.004. By December 2024, Bitcoin reached $108,135 per coin. The Bitcoin protocol didn't change. The network around it did. As more people adopted Bitcoin, as more merchants accepted it, as more institutions invested in it, each individual Bitcoin became more valuable. This is pure network effect. Bitcoin's utility as money increases with adoption. One person holding Bitcoin can't use it for payments. 1 million people holding Bitcoin creates a functional monetary network. 10 million people creates a global alternative to fiat currency. Just like land, one plot in isolation has limited value, but thousands of plots with infrastructure creates a city. The parallel is deeper than it appears. Both land and Bitcoin are non-productive assets whose value comes entirely from network effects and scarcity. Gold doesn't have network effects. 1 ounce of gold has the same utility whether one person or 1 billion people own gold. But land and Bitcoin derive value from the network of users around them. This makes them fundamentally different from commodity assets. So, if Bitcoin successfully replicated land scarcity, proof of ownership, and network effects, why hasn't it replaced land as the world's reserve asset? Why are the ultra-wealthy still buying dirt? Here's what actually happened in the 2020s. While Bitcoin reached all-time highs and crypto evangelists declared the death of traditional assets, the world's wealthiest quietly did the opposite. They moved into land. Bill Gates became America's largest private farmland owner with 275,000 acres across 17 states, purchased mostly through his investment firm starting in 2018. Mark Benioff, CEO of Salesforce, bought hundreds of acres in Hawaii since 2020, expanding his holdings dramatically during the pandemic. Jeff Bezos owns 420,000 acres in Texas, used partly for his space ventures but held as long-term appreciating assets. Media mogul Ted Turner owns 2 million acres across Montana, Nebraska, New Mexico, and other states. Businessman John Malone owns 2.2 million acres of ranch land, making him America's largest private landowner. This isn't isolated. The 100 wealthiest American families now own 42 million acres of land. That's an area larger than Florida. The amount of land owned by these families has increased 50% since 2007. Think about that timing. That's exactly when Bitcoin was being invented to replace traditional stores of value. As the digital revolution promised to make physical assets obsolete, the ultra-rich doubled down on the most physical asset of all. Even crypto billionaires are buying land. The pattern is unmistakable. Make fortune in crypto, immediately convert a portion to land. But because at the highest levels of wealth, everyone understands what casual investors miss. Land has properties Bitcoin cannot replicate. The numbers tell the story. Global residential real estate stands at $287 trillion. Add commercial property and you get $345 trillion. Add agricultural land and the total real estate value hits $393 trillion. This is 125 times larger than the entire cryptocurrency market at $3.15 trillion. After 15 years of Bitcoin, after $3 trillion in crypto adoption, real estate is still humanity's dominant store of value by an absurd margin. But because Bitcoin solved the scarcity problem but couldn't solve the utility problem. You can't live in Bitcoin. You can't grow food on it. You can't build factories on it. Bitcoin is pure monetary value. Its only use is as money or speculation. Land is monetary value plus productive value. It generates rent. It produces crops. It enables commerce. This dual nature makes land fundamentally superior for long-term wealth preservation. Here's the brutal reality that crypto enthusiasts hate hearing. When the world's wealthiest people want to preserve wealth for their grandchildren, they buy land. Not Bitcoin. Not gold. Because after 10,000 years of testing, land remains the only asset with absolute scarcity, immutable ownership, network effects, and intrinsic utility. Bitcoin nailed 3 out of 4. That's impressive, but it's not enough to replace the original. Let's connect the pattern across 10,000 years of financial history. Land was the original Bitcoin not because Bitcoin replicated land, but because land always had the properties that make Bitcoin revolutionary. Absolute scarcity, provable ownership, network effects. The difference is land achieved these properties through physics and geography, while Bitcoin achieved them through cryptography and distributed computing. Both work. Both create value. But only land combines these properties with continuous productive utility. Every financial technology between land and Bitcoin was an attempt to improve portability while maintaining land's core properties. Gold was portable but generated no income. Fiat was infinitely portable but destroyed scarcity. Bitcoin is perfectly portable and perfectly scarce, but generates no income and has no physical utility. This is why the pattern we're seeing in 2024 makes sense. Bitcoin is the best digital attempt to replicate land. But it's still just that, an attempt. The ultra-wealthy understand something crucial. True wealth preservation requires both scarcity and utility. Bitcoin has scarcity. Land has both. That's why Gates, Bezos, Benioff, Turner, and Malone are buying land while also probably holding Bitcoin. They're not choosing one or the other. They're acknowledging that each serves different purposes in a complete wealth strategy. The real insight is this: Bitcoin didn't make land obsolete. Bitcoin proved how valuable land's properties are. By successfully replicating land's scarcity digitally, Bitcoin demonstrated that absolute scarcity is worth $3 trillion of market value even without utility. Now extrapolate that to an asset with land's scarcity plus utility. That's why real estate is worth $393 trillion. No financial innovation can create more earth. No matter how sophisticated the technology, no matter how distributed the network, the physical reality remains. 148.9 million square kilometers of land, fixed since the continent stabilized. Every human being needs a portion of this finite surface to live, work, and produce. That fundamental fact hasn't changed in 10,000 years. It won't change in the next 10,000. Bitcoin is revolutionary. It's the first truly successful attempt to create digital scarcity. But calling it a replacement for land is like calling telephones a replacement for roads. Both are valuable. Both serve crucial functions. But you can't live in a telephone network, and you can't grow food on a blockchain. The cycle is complete. Humanity started with land as the ultimate store of value. We spent 5,000 years trying to improve it. Gold for portability, fiat for scalability, Bitcoin for decentralized scarcity. Each innovation succeeded partially and failed partially. And now, after the entire technological revolution, The smartest money in the world is quietly moving back to where it started. Back to land. Because land remains what it always was, the only asset with absolute scarcity, immutable ownership, network effects, and intrinsic utility. Bitcoin is land version 2.0. It's an upgrade in some ways. But it's not a replacement. Nothing can replace the original. 10,000 years ago, the first farmers realized something that shaped all of human civilization. Land is the ultimate asset. Not because of tradition. Not because of sentiment. Because of mathematics. Finite surface area divided by infinite human need equals permanent scarcity. Every financial innovation since has been trying to bottle that same formula. Gold tried. Fiat tried. Bitcoin came closest. But here we are in 2024, supposedly in the digital age, and the world's largest asset class is still land at $393 trillion. Not close. Not debatable. Dominant by a factor of 125 to 1 over crypto. The supposed revolution turned out to be just another variation on a 10,000-year-old theme. Bitcoin is impressive. It proved digital scarcity is possible. It demonstrated that distributed ownership can work. It showed that you don't need governments to create money. These are genuine achievements. But Bitcoin is not revolutionary, it's evolutionary. It's the latest in a long line of attempts to recreate digitally what land provides physically. And like all previous attempts, it succeeds partially and fails partially. It has scarcity but lacks utility. It has proof of ownership but can't generate food, shelter, or productive value. The ultra-wealthy understand this. That's why they're buying land while everyone else debates Bitcoin. They know the final score. You can create infinite cryptocurrencies. You can fork Bitcoin 1,000 times. You can build metaverses and virtual real estate. But you cannot create more Earth. That scarcity is absolute. That utility is real. That value is permanent. Here's the question nobody wants to ask. What happens when Bitcoin's price eventually stabilizes because adoption plateaus? What happens when the network effects max out? Land will still be generating rent. Farms will still be producing food. Cities will still be growing on the same finite surface. The Bitcoin network can exist in perpetuity, but it can only store value. Land stores value and creates value simultaneously. One is speculation on scarcity. The other is scarcity plus production. That difference is everything. The oldest asset is still the final boss. Bitcoin didn't replace it. Bitcoin proved how valuable its properties are. And now the cycle is complete. Those who got rich on digital scarcity are converting their gains back into physical scarcity. Back to land. Because at the end of every monetary revolution, no matter how sophisticated the technology, wealth flows back to the same place it started. The ground beneath your feet. If this analysis changed how you see the relationship between digital and physical assets, hit the like button and subscribe for more deep dives that go beneath the surface. Thanks for watching. I'll see you in the next one.